Hello guys, how are you doing? Hope you guys are doing great. Welcome to another video. Just as I promised you guys, today we are going to be discussing on market structure, which is one of the things that a lot of us are getting wrong, or how do I put it? A lot of us are ignoring it, and it's very, very important as well. Okay, so today we are going to be talking about market structure. Now, when you look on my screen, you always see IF is the king. All right. So IUF here is the first thing that you need to determine. And if you haven't watched the video yet, you can check the link on the description below so that you get to know how to determine your IF first. Okay. Because first of all, have to determine your IF before now you're looking at market structure. So I'm considering that you know IUF already. So we're going to be talking about market structure now. All right. Now, there are key things that you need to take notes before you can say my market structure is bullish or bearish. Or let me just start afresh. We have three main structures in the market. We have an uptrend, a downtrend, and a ranging market. Okay. A bearish market, a bullish market, and then a ranging market. So when you see a market creating lower lows and a lower high, creating a lower low, a lower high, a lower low, and a lower high. Now this low is a lower high. Why? Because it's actually lower than this one. All right. And then this one is a lower low because it's lower than this and even this again. So we have lower lows and lower highs. So this here is a downtrend. This is a downtrend at this level. So this is this is a type of market structure, a bearish market or a bearish trend. We call it a downtrend or whatsoever. All right. So here again, this is an uptrend, price creating a higher high, it creates a higher low, it creates another higher high, it creates a higher low, right? This is a higher low because actually it's higher than this, it's higher than this, but it's lower than this, so it's a higher low. All right. So this is a higher high, it's all higher than both of these swing points down here. So here, this is what we call an uptrend. This is an uptrend. Now, in a ranging market, price is barely making higher highs, no higher lows. It's like just tied in a particular trading range. Okay. It's neither going up or coming down. It's not showing willingness to either trend up or trend down. Right. So these are simply the types of market structure. All right, but I am going to be going detail for you to understand how you can determine your market structure. Why am I saying so? Is because there are some times in the market that you see price going down. Give me a second. Let me just delete this. Okay. There are some times in the market you see a downtrend, and then you see price break this lower high, and you feel like, okay, maybe the trend is bullish, and then price creates another lower low, continue the downtrend, just like that, and then you feel like there's a break of structure, price should start going up, but it continue the downtrend. So these are the things that we're going to be looking at today to help you know how to determine your structure very well after you've determined your institutional order flow. Okay. So, but now these are the things that the thing that will help you here is to make sure that you can identify your institutional order flow without any problems. Okay. Because with this, normally this is a structural break here. All right. And according to market structure, it's a signal that the trend is changing direction. So you need to know that with your IUF, this is possible to happen, but in normal circumstances, the trend is still bearish. All right, there are things that will make you know that the trend is still bearish despite price taking this swing high, even as it did here, the same thing. All right, it's the same thing with an uptrend. You can see price creating higher highs, and then out of a sudden, you see it takes a higher low. All right, and then you may like, okay, you're expecting price to go down, and then it creates another higher high and continue the uptrend. So those things, they do happen, and the only way for you to escape that, it's by knowing your institutional order flow and then knowing what price is doing. All right. So now there are some key things that you need to take note of that will save you all these stress and mistakes, okay, that you're going to be doing. Now, like I said, in a downtrend, we have a higher, a lower high. We have a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. And then sometimes price can take a high like this, and yet it still drops, right, to create a lower low. Now, when you see this, it doesn't just basically mean that the trend have changed direction. Okay, it doesn't just mean the trend have changed direction. Now, for you to free yourself from this, you have to be looking at higher time frames. Okay, remember, even the institutional order flow video, I kept on emphasizing that your higher time frames takes the lead. Okay, your higher time frames takes the lead. If you want to determine your market structure, let's say on 5 minutes, you should be looking at the time frame more than the 5 minutes, because there are things what we call internal structures. Okay, we have things like internal structure, which we can have. Let's say on the 1 hour, we can have a lower low like this, a lower high, another lower low, a lower high, and then another lower low. But now on the 5 minute time frame, in this pullback creating this lower high, you can have a series of an uptrend here with swing points and things like this. So at this level here, this is called an internal structure. Okay, you see price on the 5 minutes breaking a swing high, creating a higher low and creating another higher high. Then on the 55 minute, this doesn't mean that we are having a long-term bullish trend. All right, it's just a pullback that is happening on a higher time frame. So that's very important for you to note that when you are determining your market structure, you have to look at a higher time frame. You have to study the higher time frames before you can confirm your market structure, right? But remember, like I'm saying, the first thing that you need to do is to look at your IF. If you determine your IF and you know that this is where price is going to, now the next thing that you will need to do now is to look at your market structure, waiting for price to break a structure to that direction, and then you take your trades. All right. I think we have talked about imbalances, fair value imbalance, other blogs, how you can trade from there, right? So we're going to be looking at some quick examples. All right, we're going to be doing more of practicals here. All right, let's just look at this. Normally here we have a downtrend. We're having a very good downtrend here, right? Price is creating lower lows, lower highs, lower lows, lower highs, lower lows, and so on, going down. But now, if you look deeply, you would notice that price was taking some swing highs. Okay, price like this one, this was a lower high that was taken. All right, price created a new higher high. This high is higher than this one, right? So a lot of people will see that this is already a change in the structure, but yet it's not a structure change, because if you look at a higher time frame, let's just quickly look at it. Let's just quickly look at that at this point. Okay, now this is the area here. This is where we are, and then this is the break of structure that we have had from a higher time frame. So we want to confirm why this break of structure here did not change the structure to become bullish. All right, so like I said, you have to keep track of your higher time frame, because if we haven't been looking at a higher time frame, we'll start thinking of, okay, let's either buy from this other block and so on. Okay, but it didn't hold because price had price did not give us a break of structure from a higher time frame. So this is just like an internal structure here that was taken, which is just internal range liquidity. Because even looking at here, you'll notice that price came back up to this bearish order block here. Price came back up to this bearish order block from the daily time frame. So this is the daily time frame, and price is fractal. So all time frames, you can see this play out. Okay, price is fractal. So let's just look at the weekly chart, and then we'll see what is going on there. Now, when you look at the weekly chart here, you notice that there was actually nothing here like a swing high. All right, there wasn't a clear swing high here. Price just dropped down. It left us with a fair value gap here, came back to fill it, and then confluence with the daily order block to continue the downtrend. But when you are looking on the even let's go to the 4 hour so that you see that we had a very clear uptrend at that level. But this wasn't a complete uptrend. This was not a long uptrend like we should say, okay, price is bullish for this length of time. You need to be tracking from a higher time frame so that you don't get lost on a smaller time frame. Okay, so you don't get lost on a smaller time frame. Now you see here that okay, price started creating a higher high, higher low, another higher high, higher low, higher high, higher low, higher high, higher low, and then it starts to break structure, giving us signals that the trend is changing from the 4 hour time frame. So now, despite this pullback, we could be bullish here actually, right? We'll be taking long entries from here, but we know that as price is going up, there is a level on a higher time frame that is drawing price. All right, if you haven't watched the institutional order flow video, you can do that. Okay, because what I'm explaining here is it's based on the knowledge of the institutional order flow. All right, you can still rewatch the video as many times as possible until it sinks deep to you. Okay, so now, despite here that we are buying, we know that there is an internal range liquidity here that is drawing price. Okay, we have internal range liquidity here drawing price. On the weekly chart, we had a fair value gap, which is a CB. And on the daily, we had a bearish order block. All right, so if we are buying, as we have seen price breaking structure, or we are buying either from fair value gaps or other blocks, we know that price is going somewhere and this trend is not going to last forever. Okay, we know that price is going somewhere and the trend is not going to last forever, which means that as price reaches our higher time frame POI, we are going to stop buying and then we'll start to monitor reversal signals. Okay, we're going to start to monitor reversal patterns and so on. Okay, so at this level, if you keep if your mind is so focused on just a lower time frame here, you will not know why this uptrend out of a sudden just started bearish, going bearish, right? But when you look at a higher time frame, you will notice that if you bought from here, you would have taken your profit somewhere and then you sit and you wait for price to give you a structure shift. It's very simple, all right? So keep track of your higher time frame. If you are even a scalper from the 1 minute chart, make sure that the 15-minute chart you take, that is, you're checking your higher time frames. Okay, you are constantly checking your higher time frames. All right, you are constantly checking your higher time frames. Now at this level here, this was yesterday, this was yesterday. Now we had something here like a downtrend on the smaller time frame. I'm just doing this practically. Okay, that's how I just love to teach. So we had price was actually here on a bullish market, and then out of sudden we start breaking structures. All right, price started creating smaller, higher, lower lows and lower highs, lower lows, and so on. So at this pullback here, I want to focus on this area here. Okay, that's where I want us to focus on. Let me highlight it so that we don't lose track of this area. Okay, so this is a downtrend here on the 15-minute chart. Okay, if we're going down to somewhere like let's say 1 minute chart, now look at this area here on the 1 minute chart. At this point, we're already in a bullish market. Price was already creating higher highs and higher lows. All right, but why did out of a sudden it stopped immediately at this level? Now with this point, let's just say let me just put this so that we go back to the 5 minute and see why this uptrend did not continue, right? Why these prices did not continue to create higher highs and higher lows. So if you were a 1 minute trader and you get lost on this smaller time frame, whether you're drawing trend lines to trade, you see these two bullish candles and then you just buy that you want price to create another higher high. But this didn't work. Why? Because let's just go back to the 15-minute and see why price didn't create a higher high, at least from here. Okay, so that is it. It's very, very important. Let's check 15-minute chart and see why price reversed from there. Okay. Now, exactly where price reversed, we had a CB here. Okay. There was a CB here, which is an internal range liquidity on a higher time frame. You see the importance of your higher time frame now. All right. So this is a good CB from here, which was a good place to take your entry as a sell to continue this downtrend. Okay, and the stop loss can be at the high of this candle, and then your take profit will be at the external range liquidity. This was just a clean 1:3 trade. Okay, 1:3. Now, if you were not looking at a higher time frame, you would have taken a loss from this trade. Immediately you see price here trying to create some type of bullish momentum. Okay, at this level now, people that are looking at higher time frames will be selling, and then you'll be buying from here. Okay, you'll be buying from here because you have seen a bullish order block here. You have seen a break of structure from here. You have seen a break of structure from here, and then you are buying from this other block. Right, you see a nice reaction from there, and boom, it hits your stop loss. This is how your buy should have, it will be looking like this, and then you're expecting price to create another high. Now this will not work, right? This can't work. Okay, so market structure here has been broken, but yet the additional order flow had a draw on liquidity on a higher time frame. That is very, very important. Okay, we had a higher time frame draw on liquidity. Despite we had a break of structure here and a good order block here, there is, like all the PDRs, order blocks or fair value gaps, once they are against your additional order flow, it's not going to work, right? Those are the reasons why you see a lot of other blocks not working and so on. Now, this is another break of structure here, right? This is another break of structure here. And this is, those of you trade demand and supply or whatever, this is the bearish order block that caused this break of structure. You see that nice move down. So what happens is you will start to take your trade from here, right? Take your trade from there, and you're like, okay, you're going to sell down for price to make a lower low and so on. Forgetting to note that on a higher time frame, there is still a draw on liquidity, which is a fair value gap from this area, okay, which was the fair value gap from the M15 time frame. All right. So what I'm saying is price is actually fractal. What we are discussing here on the 15-minute and the 1-minute chart can be seen the same on the daily and the 1-hour chart. Okay, the weekly and the 4-hour, the monthly and the daily time frame. So price is fractal. Anything that we are discussing here, you can relate it with any other time frame. It still works the same. All right. So that is how you determine market structure. You're looking at break of structure in line with where you want price to go to. Okay, you determine your IAF first before you are looking at a break of structure to that particular direction. Let's say we have a draw on liquidity here on a higher time frame and price is playing somewhere around this area. The only thing that you're supposed to do here is to wait to see a break of structure to the upside to confirm that your trend is bullish, and then now you can take your trade from an order block or fair value gap here with a reaction, and then price will head up to your POI to take your entry. Okay, it is as simple as that. You spot a draw on liquidity here on a higher time frame, you step down to a lower time frame to see the reaction of price, to see if price is trying to be creating lower lows and lower highs, lower lows and lower highs, so that you get to your POI. Right, you take your entry from this fair value gap and then you sell down to your POI. Right, now at this level, peer price can, by dropping, it can take some liquidity up, but you're looking at higher time frames. This liquidity grab here can be because of a higher time frame POI, right? So you don't get lost on a single time frame. Always check your higher time frame. If you are using the 1 minute and it's messy, look at the 3 minutes. If 3 minutes is the same thing, look at the 15 minutes. If 15 minutes is the same thing, you go to the 30 minutes. All right, that's simply how you determine your market structure. It's not hard, just market structure is simply just price making higher highs and higher lows. But remember, like I said, we have internal structures, all right? We have internal structures. If this is the daily time frame, know that when you go to the 1 hour chart, this pullback here will be a complete downtrend. Okay, this pullback here is going to be a complete, you are going to have a complete downtrend on this pullback on the 1 hour chart. And then now this impulsive move again up here, you have another uptrend on the 1 hour as it's coming back down. As the daily is giving us a pullback, we are going to have again another downtrend on the 1 hour. So when you are selling on the 1 hour on this downtrend, you need to know that price is seeking for internal range liquidity to some areas here, and it's going to continue the bullish movement. So you don't get lost on selling here without looking at the higher time frame. All right, because this pullback can be coming back to a fair value gap here, and if you keep focusing on the 1 hour, you will not notice the fair value gap here. And when price hits it, start to buy rapidly, you will be trapped in a sell. All right, so always check your higher time frames. Know that we have internal and external structures, okay, which are based on higher time frames. Like I said, this can be the weekly chart. Price is creating higher highs and higher lows. And then when you go to a lower time frame like the 4 hour, you're going to see a clear uptrend here. All right, you go to let's say you go again to a smaller time frame, like let's say 5 minutes. On the pullback of this 4 hour, when you see this 4 hour pulling back, you are going to also see a downtrend here on the 5-minute chart. All right, so you need to know that as time frames are changing, structures within them are also changing. Okay, now this with this on the 4 hour, as prices at this point, this is a pullback on the weekly chart, but the 4 hour here is going to give us a downtrend. Yeah, the 4 hour here is actually going to give us a downtrend. And even in the course of this downtrend, the 5-minute chart, the pullback that is happening here, this pullback, all these pullbacks here, they are going to give us something like this as an uptrend. But we need to be very careful to know that the higher time frame is not bullish yet. We just know that this price is pulling back to some internal range liquidity here to continue the downtrend till the weekly reaches its own key level, right? So that's how you determine market structure. And with your IAF intact, with your IAF in mind, you will know how it'd be very easy for you to spot your structure. Okay, that is it. It's not well. I didn't even intend to make this video long. All right, so let me just let's talk about this before I end the lesson. Today I'm going to make more videos as time goes on with market structure. Okay, so today let me talk about trend reversals. All right, how do you know if a trend has changed direction? So if you're in an uptrend, like I said, and you notice price start to break a higher low like this is just a signal that the structure is about to change, right? And now if price respects this high, okay, and then it breaks this low again, so this is a confirmation of a downtrend. All right, so you are not expecting price to make lower lows and lower highs. So this here it's like a reversal pattern. Some people call it the head and shoulder pattern. All right, so you have to notice a break of structure and then a break of structure to confirm that price is going bearish. All right, this is your shoulder, your head, and then your shoulder again here, and a break of structure. This is called a reversal pattern. All right, there is another one which is like a double top. Price can be in a bullish market. As price is going up, you notice price break a structure like this. It can break a structure and then it creates something like double top, right, at the same spot, and then it breaks structure again and then it goes down, right? So we were actually in an uptrend here, and then price starts to break structure. This is a signal that the structure is about to change, right? And then now it didn't create another higher high, right? Which means that the orders from here were not enough to, or the institutions are changing direction. Okay, so from here now the market will start. If the market creates another lower low, that's a confirmation that we are now in a bearish market. All right. So all this you can just is the same thing in a bullish market. The market can be going down and then it breaks structure. That's a signal that the structure is changing. It comes back, it breaks another structure. You are now the uptrend is now confirmed. You can now be looking for more buys for the price to continue up to where you have the draw on liquidity on a higher time frame. All right. So guys, this is not that much. There is another pattern again we have, which is called with an SMS. Price can be in an uptrend. As price is trading up, this lower low, it goes up, it doesn't create a higher high, right? And then it breaks structure down, right? So this is what we call SMS, and price goes back up and then a structure change, right? It's as simple as that. Price can be going up, creating higher highs and higher lows. It creates a higher high, creates a higher low. Upon creating another higher high, it doesn't, it fails to create it. Okay, it fails to create another higher, and then it breaks structure down. All right. So this is another reversal pattern here for you to help you know that the trend has changed direction. Okay, that's just to help you know that the trend has changed direction from its up movement to a down market. All right, let me see if we can quickly see any patterns here. Okay, so here we were in an uptrend at this point. Okay, we're in an uptrend here, and then let's even start with this one, right from the downtrend. I want us to start somewhere right down here. Okay, all right, so here we were on a downtrend. We're on a downtrend. Price was creating lower lows and lower highs. So this was a lower high. Instead of this lower high to create a lower low, it failed to create a lower low, and then it created an SMS. This is a failed swing, and then price broke structure up here. So this is a confirmation that we are bullish. So you start now looking for entries on other blocks and fair value gaps and things like that. All right, to continue the bullish market. And as price went right up, went up, this it reaches at this level now, right here. Clear my drawings. Okay, so we had another break of structure here. Okay, price broke structure, came back up, and then we're having now a downtrend on fiber. Right now, where is this downtrend going to? That's the question you should be asking yourself. Where is this downtrend going to on fiber? How will you know where it's going to on fiber? So you need to be looking at a higher time frame to spot why price is bearish, where price is going down to, right? And for you to know that, that's the knowledge of your institutional order flow, and you have to be looking at a higher time frame. So when you look at a higher time frame, what do you see? We have a very nice BC from here. Okay, we have a very good BC from here that will be expecting price to drop down to. So this is a draw on liquidity. This is a draw on liquidity that we have here, okay, which is our BC, which is a BC from the 1 month. All right. So this is the draw on liquidity that we have here. So any downtrend, as we are seeing this downtrend happening, we are expecting price to drop down to this area before we start now. Instead of buying, we'll now sit and be looking to see a structure break to the upside, right? So at this level here, we are still bearish. Okay, we are still bearish from higher time frames. If you're looking at the daily, you will notice that we are still on the downtrend. All right, so you don't get lost on a smaller time frame without checking your higher time frame. This is a swing low, this is a swing high here. All right, another swing low, and then another swing high. We'll be expecting price to drop down before. If you've seen now a structure change, see price start breaking high, some higher highs here. Let's say price hits our monthly POI and then gives us a break of structure. Now we'll start looking for bullish to continue the uptrend from the monthly. Why? Because the monthly is bullish. All right, the monthly is bullish. It's just giving us a pullback. The monthly is just giving us a pullback to continue the uptrend that was going on. All right, for price to come back down and then continue the uptrend. That's what we have on the monthly chart. All right, so guys, if you haven't subscribed to the channel, please, you can do so. You leave a like and a comment on the next video you want me to make. All right, so share to your friends and family, your loved ones whom you would love to see them succeed too in trading. So until then, see you and then have a good trading.